Hey everyone, welcome back to Wealthway. Today, we're diving into a topic that impacts all of us, wealth erosion. Have you ever stopped to think about how our money loses value over time? It's a fact that banks don't really highlight. They tell us our money is growing in our accounts, but is it really? In this video, we're going to reveal the truth and share 6 powerful assets that can help you preserve and grow your wealth, even in times of rising inflation. So let's get started. For the first asset, we're delving into the world of precious metals, gold, silver, and platinum. These metals have held an allure throughout history, and there's a good reason for that. They're often referred to as God's money because of their intrinsic value and the way they stand the test of time. Have you ever wondered why money is considered valuable? It's because it's meant to store value for the future. But there's a catch. Governments today are printing more and more money to finance their deficits, leading to a potential depreciation in the value of your currency. Just think about it. That piece of paper you call a dollar might not be as powerful as you think in the future. That's where precious metals come into play. Financial experts and gurus recommend investing in valuable assets that are scarce and can't be easily created. This is why the wealthy often allocate a portion of their portfolios to precious metals like gold, silver, and platinum. Now, let's talk numbers. Before the 1950s, an ounce of gold could be purchased for a mere $400. Fast forward to 2023, and that same ounce is priced above $2,000. It's a clear indication that gold's value has been consistently on the rise. And get this, according to Prime XBT's gold forecasts, we could be looking at a gold price of $10,000 per ounce by 2032. That's just a decade away. Imagine your gold investments growing 5-fold in such a short span of time. Now, you might be wondering how to tap into the potential of gold without buying physical bars. Well, that's where gold ETFs come in. These exchange-traded funds are highly affordable investment vehicles that track the price movements of gold. You can gain exposure to the precious metal without needing to physically hold it. Now, let's shift our focus to the second asset, industrial commodities. These raw materials might not have the same glamour as precious metals, but they hold a significant place in modern society. Scarcity is indeed one reason why precious metals are highly valued. However, industrial commodities are equally essential due to their natural utility value. Take silver, for instance. It's not just a shiny metal. It's used in the production of electronics, medical equipment, and even nuclear reactors. But let's dig deeper. Think about cobalt, nickel, and copper. These metals have a high industrial demand, mainly because their unique properties can't be easily replicated by alternative materials. Let's talk numbers again. Since 2020, the demand for cobalt has soared, driven by its critical role in producing batteries for electric vehicles. In just 10 years, the price of cobalt has doubled, from $20,000 per ton to a staggering $40,000 per ton. Now, investing directly in these raw materials might not be feasible for everyone. But fear not. There are ways to gain exposure. Investing in stocks of mining companies, mining-focused mutual funds, or even derivatives like futures and options can give you the sought-after exposure to these commodities. Now, let's talk about the third asset, safe haven currencies. In a world where flat currencies aren't backed by physical assets like gold, geopolitical stability plays a crucial role in the value of your money. Enter safe haven currencies. These are the ones that tend to shine when the global economic waters get choppy. One such shining star is the Swiss, and let me tell you why. Switzerland, known for its robust economy and political stability, has been a safe haven for years. When crises hit, people often flock to assets denominated in Swiss francs to shield themselves from the storm. We've witnessed this during various crises, such as the Eurozone debt crisis in 2009 and the global financial crisis in 2008. Money flowed from countries in turmoil to Switzerland, preserving wealth from currency depreciation. In early 2023, we saw yet another example of the power of safe haven currencies. Amid the Russia-Ukraine crisis, the Swiss franc appreciated significantly against other currencies. Holders of the Swiss franc saw their wealth multiply overnight. Now, while not all of us can open Swiss bank accounts, that doesn't mean we can't tap into the power of safe haven currencies. Currency ETFs and forex brokers like forex.com make it possible for smaller investors to gain currency exposure with as little as $100. Now, let's dive into the fourth asset that's all about stability and security: sovereign guarantees. Have you ever closely examined a dollar bill? It boldly states that it's legal tender for all debts, public and private. But what exactly does that mean? Since 1971, when President Nixon ended the gold standard, the US dollar gained its value as legal tender through government decree. This made it a medium of exchange, a trusted means of payment for goods and services. While no fiat currency is backed by physical assets, they're still anchored by the government's full faith and credit. In simple terms, the stability of your money depends on the stability of the government backing it. And that's why investing in sovereign guarantees is a smart move. Governments are often the last entities to default on their obligations, because if a government defaults, it could lead to a national crisis. Remember the 2009 sovereign debt crisis in Greece? That's a clear example of how a strong government's support becomes critical. So, how can you invest in sovereign guarantees? One popular way is through government securities, or GSECs. These are essentially bonds issued by the government. But remember, it's crucial to focus on stable government GSECs with investment-grade credit ratings. In the US, you have options like Treasury bills, notes, and bonds. These offer better returns compared to keeping money in the bank. Plus, they're backed by the US government's economic strength in the global landscape. Smaller investors can even buy these Treasury securities directly from the government. The Treasury Direct portal or secondary market are great avenues for that. Moving on to the fifth asset: value stocks and mutual funds. Now, we all know that Treasury investments offer better returns than cash. But sometimes we seek higher returns without diving into high risks. Enter value stocks and mutual funds. The stock market is a realm divided into two categories: value stocks and growth stocks. Growth stocks, like those in technology, can be riskier due to their higher failure potential, but value stocks offer stability due to their established demand. Value stocks come with strong fundamentals that provide steady price appreciation and stable dividends. However, researching every single value stock can be a daunting task for the average investor. That's where dividend-focused mutual funds shine. Take the Vanguard High Dividend Yield Index Fund Admiral shares, for example. With a stable dividend history, these funds become ideal and affordable options for retail investors. And now, for the sixth and final asset, let's talk about an age-old investment that has stood the test of time: land and real estate. Land, a non-depreciating asset, has been coveted for centuries due to its scarcity and unending demand. From homes to schools, factories to commercial spaces, land is the foundation of modern society. But it's not just about the land itself. The properties built upon it, be it residential homes, office spaces, or commercial buildings, are always in demand. This makes both land and real estate excellent hedges against inflation. Let's look at the numbers. According to Bloomberg, housing prices tripled between 1992 and 2020 despite the 2008 housing bubble. Having real estate exposure can be invaluable as the dollar's value fluctuates. Now, you might think real estate investment requires huge capital, but that's not entirely true. Enter REITs, real estate investment trusts. Similar to mutual funds, REITs allow you to invest in a slice of the retail property market. And if you're thinking of rental properties, it's a strategic move. The rent covers expenses and mortgage payments while bringing in profits. And there you have it. 6 powerful assets that can help you stop wealth erosion and create intergenerational wealth. Remember, diversification is key. Consider a mix of these assets in your portfolio to secure a brighter financial future. If you found this video helpful, don't forget to hit that like button and subscribe for more insightful content. Thanks for watching, and until next time, take care!